Hi, and welcome to this week's Market Insights. Today we'll cover some key market events that could drive volatility in the coming days. So let's dive straight in. And we've got the RBA interest rate decision. Money markets are almost certain the Reserve Bank of Australia will cut interest rates on Tuesday at 5:30 a.m. GMT plus 2. Now, the official cash rate has been at 4.35% for over a year, but many economists are predicting a 0.25% reduction. That expectation comes from Australia's latest inflation data. Now, annual inflation for the December quarter came in at 2.4%, with underlying inflation dropping to 3.2%. That's its lowest for 3 years, nearing the RBA's 2 to 3% target. Now, since the start of 2025, the Aussie dollar against the US dollar has been moving pretty much sideways, attempting to recover from a long-term downtrend. The central bank's decision this week could well trigger some high volatility, so make sure you're using your risk management techniques and keep your ears and eyes open for that all-important data. Second up, it's Canada's inflation rate. On Tuesday at 3:30 p.m. GMT plus 2, Canada's inflation data for January will be firmly in focus. Now, while Trump's tariffs on Canada were postponed, potential future tariffs remain a concern. Now, economists suggest that if tariffs are imposed, Canada could retaliate, potentially driving inflation higher, especially for goods prices. Now, as a result, the latest inflation figures will be crucial in assessing the market's future direction. December's annual inflation eased to 1.8%. That was below market expectations, which sat at 1.9%, marking the softest price growth since September. Now, inflation has remained at or below the Bank of Canada's 2% midpoint target for 5 consecutive months, reinforcing expectations of further rate cuts. As a result, the Canadian dollar saw a slight depreciation before recovering, but we'll certainly be looking at these figures and watching for its next move. Well, after Australia and Canada, on Wednesday, it's the UK's turn. At 9 a.m. GMT plus 2, the UK will release its latest inflation figures. Now, earlier this month, the Bank of England cut its base rate by 25 basis points, 0.25%, in line with all the forecasts that we had been seeing. However, determining future monetary policy may prove slightly more challenging. Bank of England policymaker Catherine Mann expects weak economic growth, poor consumer strength and a soft labour market to keep inflation in check. However, rate setter Megan Green finds recent UK growth data uncomfortable and urges caution in cutting interest rates. Now, this highlights just how significant these upcoming inflation data figures may be for us. Annual inflation in December edged lower to 2.5%, slightly below forecasts and the November data. However, it did match the Bank of England's forecast from early November. As a result, the GBP initially weakened against the US dollar, but quickly rebounded. Let's see how it's going to react this time, Wednesday morning. Well, we're going to turn away from inflation data now and look at something else, and that's precious metals price fluctuations. Now, gold prices continue setting new records as investors seek safety amid global uncertainties. Trump's tariff policies have been a key factor in recent times, boosting gold as a safe haven asset. Now, this week, gold's movements will depend on economic and political developments. Unexpected news could well drive some volatility. Additionally, a long-term rally is quite often followed by corrections, so traders need to take that into account, the possibility of price declines, and make sure you're using your risk management techniques. Silver hasn't quite reached all-time highs in the way gold has done, but trade war concerns have supported its price too, and we can see these on the charts. Future movements will depend on tariff-related developments. We know that Trump has imposed tariffs on Canada and then they've been suspended, obviously imposing tariffs on China as well. These are going to be majorly important factors in the days, weeks and months ahead. Okay, finally for this week, we've got some big earnings reports coming up. Walmart and Alibaba will release their quarterly results on Thursday before the opening bell. Now, for Walmart, analysts project earnings per share of 64 cents. That's a 6.7% increase year on year, and revenues of $178.83 billion. That's up 4% year on year. Alibaba is also expected to report an increase on its earnings per share of $2.84. That's up 18.3% year on year, with revenues projected to be at $38.19 billion, a 4.14% increase on the year. Earnings reports often cause market fluctuations, so be sure to manage your risks accordingly. Well, that's a wrap on this week's market update. Stay tuned to Market Pulse on our website for more insights and analysis. Thanks for watching, and we wish you luck with your trading in the week ahead. Bye for now.